start your way. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup, and mostly, if you're looking at most of the global cues, they have managed to inch up in trade currently. The SGX Nifty is indicating a downtick of 13 points, but remember, we were shut on Thursday and Friday, and the SGX Nifty was up almost 125 points. So expect more than a 100-point gap up opening as far as our Nifty is concerned when it opens on at 9:15. So that's the cue. Most of the ADRs ended with a positive bias. So counters like Tata Motors, HDFC Bank, Vedanta, ICICI Bank, anywhere up between 1 to 2%. So strong traction happening there. Dr. Reddy's was the only one that ended with a negative bias. As far as crude is concerned, we've had two negative days on Thursday and Friday, but today crude seems to be inching up. But still we are below the $70 barrel per mark as far as Brent is concerned, and WTI is still above the $65 barrel per mark. Most of the base metals on the LME managed to end with a positive bias. So you had copper, which ended up almost 0.7%. Nickel was up almost 1.3%, and tin was up almost 1%. What didn't do well was aluminium as well as lead, which were down 1%. But the cues coming in from China are extremely positive. Copper, zinc, aluminium, and steel, all of them are trading with positive bias. Even the precious metal seem to be doing well in today's trade. As far as fund flows are concerned, FIs were net buyers, FIs were net sellers to the tune of almost 1,200 crores in the cash market, and DIs bought in almost 1,960 crores in the cash market. Now, as far as the sectors are concerned, Nifty ended down 70 points, but the Nifty Bank was down almost 170 points. Mid caps and small caps seeing significant amount of selling that came in. The other sectors that were really weak were metal, PSU banks, and the Nifty media, which were down in trade. Now, the Nifty was down over 70 points. What contributed negatively? First of all, the VIX was up almost 1.3% since the market was weak. Reliance, Infosys, ICICI Bank, and ITC were the main contenders that led to a 70-point downtick on the Nifty. But Agam, what are the FNOQs indicating?
Well, last time was a truncated week, so we did have 2 working days off, which means we also had expiry last Wednesday. And with respect to how rollovers have panned out, at around 69% for the Nifty, largely in line with the previous 3-month average. Not too much to speak for. Its April open interest did see about a 39% increase. Coming down to the Nifty Bank, rollovers were higher at around 75%, with an increase of nearly 37% in open interest. The India Volatility Index, however, did not move too much. It just gained about 1.3%. And, as one might expect, a big change coming in the Nifty put call ratio that actually fell down to the mark of 1 in comparison to 1.15. But what is it when it comes to the changes in open interest? And it was a 10,200 strike which saw a lot of activity. In fact, the 10,200 call saw the most amount of writing, and on the other hand, the 10,200 put saw unwinding coming along. What is the range of the Nifty that we're looking at as we move into the new series? Well, it's about 200 points for now. This is likely to change, but for now it's between the 10,000 put, which has a max OI, and max OI in the 10,200 call. Moving in, let's take a look at stocks, which we will be watching out for in today's day of trade. So Coal India sees fresh longs because it's seen a lot of accumulation across series. We're also looking at something like a Hero MotoCorp. We'll be watching out for numbers. It's moved up by as much as 2.3%. And of course, we're also keeping an eye on something like a Cummins, which saw a little bit of weakness, down as much as 1.6%. So some stocks. And of course, also do remember that considering the fact that we've seen the SGX Nifty move up by as much as 125 points, we'll be watching out for how the Nifty opens as well in today's day of trade. But that's as far as the markets are concerned. The retaliatory tariffs for $3 billion imposed by China on various products like wine, pork, and nuts comes into effect today. And Bloomberg's Tom McKenzie is here to tell us more on this. Tom, what is the impact likely to be?
Well, it's going to be $3 billion worth of tariffs that were announced earlier in March, I should say, and they, as you said, will come into effect today. So they're going to impact things like fruit and nuts and wine as well, and pork from the US, as well as a small amount of metals as well imported into China. But this is obviously a relatively small conservative number, as has been described. Those tariffs are kicking into play today. What we aren't seeing yet are broader tariffs on larger imports, so for example soybeans, although of course they are potentially on the table. We're waiting to hear, of course, from the Trump administration the details of this $50 billion worth of tariffs. He's got until April the 6th to confirm exactly which products those are going to be put on, and then of course China has said it could retaliate with further measures, because these $3 billion worth of tariffs are in retaliation for the metals tariffs that the Trump administration imposed. So we could be looking at further tit for tat, of course, when it comes to these tariffs on both sides. But for the moment, this $3 billion, a relatively small impact. It may change my shopping habits a little bit, but of course it is the US-China trade tensions that are potentially the key headwind when it comes to China's economic growth picture, as well as the de-risking and deleveraging campaign and the anti-pollution crackdown as well.
Stock of the day is Canfin Homes. Well, Canara Bank, the promoter, has called off the divestment plan in Canfin Home. The PSU lender has said that it has not got the desired bids as per, which is in sync with the valuation of the company, and the Canara Bank was looking around to divest 30% stake in the company. This is a part of its sale of non-core assets, which in turn would have led to improvement in the core strength of the company, the core financials of the company. Sale was, reports suggested HDFC was eyeing a 30% stake in the company. Just a bit rundown of what Canfin Homes is all about. Well, it enjoys 5-star rating from NHB and also commands a premium valuation in the home finance space as compared to that of its peers, and has delivered a good, healthy operating performance and a steady NPA or steady asset quality. It is a HDFC with a strong loan book with a CAGR of 38% for a 5-year period. And if you look at the shareholding pattern, you'd see Canara Bank holds nearly 30% stake in the company. Other key shareholders include Chhattisgarh Investment, which holds roughly around 10% stake in the company. If you look at the shareholding pattern for December, as per the BSE filing, you would see promoter in all holds 30.44% stake, which is Canara Bank, and public shareholding currently stands at 69.56%.
Let's now look at the commodity space and how the trade actually pans out over there. Starting off with the base metal space, the LME base metal index in fact snapped its 5-week losing streak and ended about 0.5% higher for last week. Among key base metals, aluminium and copper saw their worst quarterly performance on the back of surging inventory levels. Now, copper traders are also seeing that prices are likely to climb after the first quarter slump that we got for the copper market. Amongst other base metals, nickel and tin actually ended more than 1% higher, while aluminium and lead declined more than 1% each. Now, if you look at the Shanghai Futures Exchange, most of these base metals have opened with a positive bias. With Shanghai Steel, that has come off the day's high. At one point was trading about 3% higher, but currently trading at about 1.5% higher. As far as gold prices are concerned, we saw that gold has now stabilized near the 1330 mark, and in fact it posted its third quarterly rise on the back of ETF demands. As far as the oil markets are concerned, oil prices, WTI has stabilized near the 65 per barrel mark, while Brent is trading near the 70 per barrel mark. Now, this is on the back of US shale drillers, which have actually idled 7 rigs. Also, that Iraq has now exported more than 100 million barrels of crude for the last month, as per oil ministry report.
Well, among the stocks that we're tracking is ICICI Bank. In a big development over the long weekend, we did see a case of quid pro quo coming up between the chairman, the MD and CEO Chanda Kochhar and the Videocon group. But apart from that, the RBI has also imposed a penalty of 59 crores for non-compliance of rules on ICICI Bank. Now, these rules relate to the direct sale of bonds from its held to maturity or HTM portfolio, and this is for the quarter ending March 2017. So that's one stock we're watching out for. Also, Punjab National Bank, which has settled all its LOUs and foreign letters of credit worth 6,500 crores, which matured on 31st March. We're also watching out for Tata Power, which has sold its defense business to Tata Sons unit, and that is for an enterprise value of 2,230 crores. JSW Steel is another one in focus. They will buy 100% shares in Delaware-based Acero Junction Holdings, and that will be at an enterprise value of $180 million. And continuing with this theme of monetizing assets, Reliance Capital has sold 14.9% stake in KGS Developers for 82 crores, and they have sold another 19% stake in Sula Vineyards for 256 crores. So some sort of asset monetization and fundraising for Reliance Capital. That also continues for IDBI Bank, which has said that they have sold their BKC office property to SEBI, and according to a Times of India report, that transaction is valued at 900 crores. Apart from that, we're watching out for L&T Infotech, which has said they will pay $10 million over 2 years as per an agreement with a client, so some sort of a settlement pact there. Quality is another one where some clarification came in. Remember, those Quality shares were battered last week. They've clarified that the fraudulent offloading of shares was by an absconding broker, which led to the kind of movement that we saw in the shares last week. Ashiana Housing has entered into a pact with World Bank arm IFC, and that is to co-invest in an affordable housing project worth 375 crores. We're also looking out for Punj Lloyd, which has won an order worth 806 crores in Odisha. You have Balaji Telefilms, which will be in focus as well. Now, Airtel and Alt Balaji have signed a pact to offer digital content, so watch out for that name. And lastly, renowned investor Monish Babrai's investment fund has bought an additional 0.1% stake in Healthcare Global, so watch out for all those names in trade today.
Well, in terms of your auto sales for the month of March, it's been a very, very good month. Starting off with Maruti Suzuki, what we've really seen is a substantial uptick in the utility vehicles on the back of Brezza, and of course the mini hatchback has also done very well. The compact segment also keeping pace, about 13.5% increase. But what does it mean for FY18 when it comes to Maruti? Well, very, very healthy numbers. And we have seen substantial outperformance in utility vehicles, good sales coming for passenger vehicles and domestic sales as well. Exports, however, have just lacked a little as far as Maruti Suzuki is concerned. Moving on to Tata Motors, once again it has been a very strong month of March because we have seen a substantial uptick in MHCVs, and LCVs specifically see their volumes double for the month of March. Pickup trucks also up and about, and passenger vehicles have also picked up quite a bit for Tata Motors. What does this mean for FY18? Well, again, commercial vehicles looking at 23% growth, and passenger vehicles looking at 22% growth. So a good year in comparison to what we've seen in FY17 and 16 for Tata Motors. Royal Enfield, again, they continue to show robust growth. The momentum continues with domestic sales up 26% and exports up 20% for FY18. And for Royal Enfield, again, a very, very good year with over 23% of growth coming in for domestic sales as well as exports. This is as far as the numbers we have so far for the month of March. Let's also take a look at what we can expect for some of the other companies which will announce their numbers today, volumes today. So we have Ashok Leyland expecting nearly 14% growth, M&M Auto expecting, well, subdued 6% growth, and M&M Tractors on the other hand, trying to catch up and with Ashok Leyland. But in two-wheelers, the numbers expected to be a lot more robust, and Hero MotoCorp expecting at 10% growth. Bajaj Auto is expecting a 30% growth, and TVS Motor Company again expecting 19% growth. So we're expecting a very strong month for March. We'll have to wait and watch for as to how these numbers pan out and whether or not they will be in line with the Bloomberg Quince polls.
So India has hiked the natural gas prices for the second consecutive time, and now they have been set at around $3.06 per MMBTU, that is million British thermal unit, which is around 6% higher compared to the last 6 months. Now, if you see, India had last hiked the gas prices when they had introduced a new pricing formula back in November 2014. But since then, they had reduced the gas prices to nearly half, making the gas business loss-making for many upstream companies. Now, however, this is the second consecutive hike that has come in, and these new rates will be applicable from April to September 2018, that is for the first half of financial year 2019. Now, along with this, the government has also hiked the gas prices for difficult fields or the deep water fields by around 8% to $6.78 MMBTU. Now, this revision in gas prices, along with the government's focus to double gas output, will bring in some relief for these upstream companies and will definitely boost their gas business. But among this, it will benefit the most to ONGC and Oil India. As you can see, they produce nearly 80% of the total gas produced in India. ONGC produces around 72%, while Oil India does 9%, while the remaining 19% is done by other private players. Now, if you see, the gas business contributes nearly 16 to 18% to ONGC's top line, while it contributes around 14 to 18% to the EBITDA. And for Oil India, in the top line, it contributes around 15 to 17%, and on the EBITDA front, it contributes around 14 to 17%. So we have tried to see by how much percentage the EPS of these companies will be higher if this new raise, that is $3.06 per MMBTU, would have been applicable in the corresponding period last year, that is in the first half of financial year 2018. So if you see, with so we have assumed that the gas sales and production numbers would have remained the same, and as the production would have remained the same, the cost would have also been the same. And we are also assuming that the company pays taxes at a similar rate that they paid last year. And lastly, we are assuming that the rupee to dollar conversion rate would have been around 65. So the conclusion that we get is that the EPS of ONGC and Oil India would have been higher by around 10% and 11% in the first half of financial year 2018 if these new rates would have been applicable.
See, with the adjustment of the current operations at these refineries, we will be producing the part requirement just to meet the daily requirements. So I don't have the cost element exclusively which is for this. It will be a few paisa per liter. We are not going to, it will be decided later on, in fact, I'll say. But I can tell you that for supplying the full quantity from 1/4/2020 for the country, total country, we have huge investment plans. About 16,600 crores already we have cleared. The execution is underway. This is towards conversion of Euro BS4 fuels to BS6 fuels.
Okay. So will you be passing on the cost to the consumer?
This is a good question, but difficult for me to answer. Definitely, having invested so much, we would expect a return on the investment, but immediately we don't have the mechanism. We'll be working on that.
So Sandhar Tech will be listing on the exchanges today. Now, the company had raised close to 512 crore rupees at an issue price of 332, and the total issue was subscribed nearly 6 times, with most of the demand coming in from the QIB portion. Now, the QIB portion was subscribed nearly 14.5 times, while the HNI portion was subscribed nearly 6 times, and the retail portion received a subscription of close to 1.4 times. Now, the street is expecting a premium of close to 15 rupees per share for this listing, but given the current market scenario, let's see how the share prices would list, how the valuation would stack up if it lists at a premium and if it lists at a discount. At the issue price, the market capitalization of the company would be close to 2,000 crore rupees. Price to earnings would be 29.2 times, market cap to sales 1 time, and EV to EBITDA would be 10.6 times. Now, if it lists at a premium, then the market capitalization would be close to 2,100 crore rupees. Price to earnings would be 30.8 times, market cap to sales would be 1.1 times, and EV to EBITDA would be 11.1 times. And if it lists at a premium of around discount of around 320, then the market capitalization would be close to 1,900 crore rupees. Price to earnings would be 28.1 times, market cap to sales would be 1 times, and EV to EBITDA would be 10.3 times. Now, Sandhar Tech is an auto ancillary company with mainly focused into manufacturing locking systems and rear view vehicles. Now, the company has around 31 manufacturing facilities located across 8 states in India. It also has 2 manufacturing facilities in Spain, 1 in Mexico, and is in process of setting up 5 more facilities in India. Now, the top 5 clients of the company contribute nearly 70% to the top line, and if you see, the top 5 clients include Hero, TVS, Honda, Bosch, and Royal Enfield. Now, if you see product wise, it generates most of its revenue by manufacturing locks, mirror assembly, and wheel assembly. It gets around 23% of its top line from locks, 12% from mirror assembly, and 14% from wheel assembly. On the Financial side, you can compare Sandhar Tech with Minda Corp and FIM Industries, as these two companies manufacture the same products that Sandhar Tech does. And if you see the revenue growth of the company, revenue, net profit and EBITDA growth of Sandhar Tech, it has been a bit muted compared to that of Minda Corp and FIM Industries. The company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 9%, 6% and 8% over FY14 to FY17. On the balance sheet side, the company's book value per share was close to around 104 rupees per share, and the total debt to equity will be the lowest at around 0.4 times. Lastly, on the return ratio side, the return ratios were a bit subdued when compared to Minda Corp and FIM Industries. On an annualized basis for FY18, the return on equity was 10%, return on capital employed was 16%, and return on asset was close to 4.5%.
Well, on to some more stocks to watch based on the delivery buying and selling as of last Wednesday. The first stock that you need to keep on your radar, that would be Bajaj Finserv. Now, that was down nearly 2% in trade and saw delivery selling of nearly 500 crores. The delivery volume surged more than 3 times at nearly 7.5 lakh shares as compared to its 5-day average, and the total volume shot up 250% at nearly 13 lakh shares as compared to its 5-day average. Second stock to watch out for, that would be Grasim. It was down about 3.5% in trade and saw delivery selling of more than 600 crores. The delivery volume was up more than 3 times at 60 lakh shares as compared to its 5-day average, and the total volume also surged more than 3 times at nearly 72 lakh shares as compared to its 5-day average. Last and final stock to watch out for, Balrampur Chini. Now, that was down about 7% in trade and saw delivery selling of 50 crores. The delivery volume was up 167% at nearly 65 lakh shares as compared to its 5-day average, and the total volume shot up just about 80% at nearly 1.5 crore shares as compared to its 5-day average.
It would not be unfair to draw such conclusion unless they come out and prove it to the contrary. Now, the point is, Mrs. Chanda Kochhar may not be the direct beneficiary because she is not the shareholder, but everybody who matters to her fortune is the indirect beneficiary. So, the funding has gone to Videocon. They may not, and ultimately it has benefited Chanda Kochhar's family. I have seen their press release, which says that they were a new power is not the borrower. Fine, but it looks that they are the beneficiaries, ultimate beneficiaries. You lend some money to the Videocon group in dire financial distress, which has defaulted and which was likely to be defaulted completely, and today I would say it's a bankrupt group. A group which is unable to service and has defaulted, you are lending that money, the public money or the shareholders' money to that group to revive, and it failed. So whatever the question is, of course, of the conflict of interest, it is not in public domain that she said or the bank said that there is a likely conflict of interest. Yes. Who would know that?
Would it satisfy you if there was an external inquiry?
Surely, that is what I am demanding, I am praying for. I only want a forensic audit to be done in respect of the transaction of ICICI versus Videocon A, and much more closely of Videocon versus New Power Group and DH Holding Mauritius.
Yes. No.
Unless this transaction is audited by somebody who is competent to get the information, it would be very difficult for anybody to have faith in the transaction. I would still call it dirty transaction, dirty banking.
Understood. Sir, have you...
If you see the press release,
No, go on, sir.
Yes?
No, you wanted to complete your thought, yeah.
The press release issued by the ICICI management, ICICI chairman, says that they repose confidence and faith in CEO Mr. Chanda Kochhar. The question is not of the board reposing faith in Chanda Kochhar. The issue is whether you are able to establish the confidence of the investor, the shareholders, the debt holders, and the country at large.
Well, there's clearly lots to talk about with regard to that developing story and several others, and you'll find all the live market action right here on Bloomberg Quint Live. There are also a few stories that you can consider reading on the website bloombergquint.com. Here are just a couple. Coal India is planning to generate about 20,000 megawatts of power in the next 10 years as part of its diversification plan. About 1.71 lakh electronic invoices were generated on the first day of the implementation of the e-way bill mechanism, which is aimed at plugging loopholes and boosting government revenue. Well, that's all you need to know going into trade today. Up next is Indian Open. Do stay tuned. This is Bloomberg Quint.